Eco, and in today's tutorial, it's going to be a continuation of the course ACC203, and we're going to be talking about certain terminologies in financial accounting. With this being said, let's jump straight into it. But just before we do that, I want to use the opportunity to let us know that with just a few more classes, probably 1 or 2 more classes, we should call it a wrap with the theoretical part of this course. And as soon as we are done with the theoretical part, the next time we are releasing this course will be the calculation and the posting parts to it. Like I said, this is not 300 level, this is 200 level first semester. We are going to be going through the posting and the calculation part of this course for the purpose of knowing it, right? You're not going to be asked, definitely in your exam, you're not going to be asked to post because your exams are going to be computer based. You're not going to be asked to post or do drafting, all right, of whatsoever account, but you have to just know what it entails, the processes, all right, and what account is responsible for what account, what query should be going into what account, all right. With this being said, let's jump straight into it. So we have good evening, Miss Florence Ajodo. All right, it's great to have you on board. We have ACC203. Good evening, Mr. Jack. All right, Mr. Jackson. Now, let's look at what it means by expenditure. All right, let's see what it means by expenditure. When we say expenditure, what are we talking about? All right, I believe this is something that is not new to us. All right, this is something that is not new, that is not actually totally new to us. I'm certain that we must have heard of the term expenditure before now. Okay, now when we say expenditure, we are simply talking about the money spent, all right, the money spent in an organization in order to generate income either now or in future. All right, money. Now we are talking about financial accounting, so everything we are saying now is in view of an organization's finances, management of an organization's finances. Okay, so now when we say expenditure, according to the standard of an organization, it is seen as the money spent in an organization in order all right, the money spent in an organization in order to what? Generate income. Generate income either now or in the future, or in the future. Okay, the money spent in an organization, the money that an organization spends in order to generate further income either presently or in the nearest future. Okay, so we have expenditures can be classified into what? 2, namely capital expenditure and revenue expenditure. All right, we have capital and we have revenue expenditure. Okay, when we say capital expenditure, what are we talking about? Capital expenditure is the money spent to acquire or purchase property of permanent nature, all right, for individuals and organizations. Don't forget we said generate further income. So now capital expenditure is that money, the money spent by an organization to purchase or to acquire property of permanent nature. Money spent to purchase, all right, or acquire property of All right, property of, good evening, Miss Susan. I think I'm seeing this name for the second time, or am I mistaken? Miss Susan, are you new on this stream? Please do how to message me immediately after this class. All right, now capital expenditure is the purchase, all right, or the money spent on property of permanent nature. Miss Alayo, good evening. It's great to have you on board. Money spent to purchase property of permanent nature. How can I squeeze that in now? Permanent nature. All right, when we say permanent nature, what are we talking about? Properties like landed properties. All right, properties like landed properties, machineries, plants, all right, furnitures, machinery, all right, vehicles, properties of permanent nature. All right, and this kind of acquisition or this kind of purchases, the benefit extends more than a year. Okay, you are not new. Okay, are you a member of the private class? Because I recognize my people. All right, I recognize my people well enough, because that name seems like you are just one of these people that comes and go. You are not so involved, if I may say. Now let's continue. Capital expenditure, like I said, they are not items you don't purchase. All right, this capital expenditure, items purchased under capital expenditure are not items that you buy to want to resell. All right, they are not items that you buy in order to resell. Okay, capital expenditure are not items purchased with the aim of reselling. All right, I'm not going to write that down, but just let's note that this expenditure we are talking about, they are not those things you purchase for the purpose of reselling. All right, they are things you buy for the purpose of more wealth creation. You can imagine an organization buying furniture. All right, what would they, an organization you are involved, like let's say you are this organization that runs pure water organization, all right, company. Do you buy furniture to want to resell? Is it water? No, you buy furniture because you need it to give your office a fitting. All right, probably when you have your prospective investor, they come, they sit down on it directly or indirectly. That furniture has provided, all right, a avenue for further creation of wealth. Or you buy a vehicle to distribute your water, to get your product to your customers, all right, or you buy a building, all right, as an annex of a branch of your organization. So anything you are buying under capital expenditure, you are not buying to resell. All right, and as I say, the benefit of this kind of expenditure lasts for more than a year. Okay, so we have revenue expenditure. All these are expenditure, but they are expenditures with difference. Now, revenue expenditures are all expenditures other than capital expenditure. Any expenditure you make that is other, that is excluding expenditure that has to do with capital expenditure, is what we call revenue expenditure. Okay, so let's take that down. All expenditure other than capital expenditure. All expenditure other than capital expenditure. So these are the kind of expenditure that you incur running the business, all right, on a day-to-day basis. Okay, these are the kind of expenditure you incur running the business on a day-to-day basis. Okay, these are revenue expenditure. Are we together? Expenditures like salaries, all right, selling expenses, transports, resale, all right, any expenditure you make other than capital expenditure is seen as revenue expenditure. Okay, so we have that as that. Now let's quickly talk about what we call manual accounting system and mechanical accounting system. Miss Peace, you came pretty late tonight. That's unlike you. Okay, so now let's talk about manual accounting and mechanical accounting. Basically, there's really nothing much on manual and mechanical. Like when you say manual now, these are the kind of accounting that is done manually by using pen and paper, writing down accounting details, all right, with pen and paper by a human being. All right, this is manual. There's nothing much here. Okay, manual accounting system refers to the keeping of account record by handwritten relevant posting in books of accounting. Handwritten, all right, manual. Okay, manual accounting system. And all right, handwritten of relevant posting. Okay, handwritten of, okay, she said network issue. It's understandable. At least you are here. That's the most important thing. All right, and you can always catch up. You can rewind, you can drag it back, the red cursor, and go back to it you might have missed. So when we say manual now, is the opposite of mechanical. All right, manual is handwritten. All right, mechanical is use of computer. And definitely, you know that if you are using hand to write, you are prone to making mistake as human being. That's one of the disadvantage. All right, you are prone to making mistake, definitely. Okay, and you are prone to fire, natural disaster, maybe fire, water, or something. Okay, and you know one of the advantages is that if you are using the manual kind of accounting system, that means it's cheap. All right, it's very, very affordable. How much is book and biro? Get there. It's very, very affordable and cheap to run manual accounting system. Okay, but when we say the mechanical now, we are talking about the use of the computer. Okay, mechanical, use of the computer in posting and preparation of accounting record. All right, and basically it can be expensive. Right, disadvantage here is that it's expensive, and the advantage is that it's unlike the manual that you have to, that is prone to error. It's not the same thing. It's not such is not in the case of the mechanical using of the electronic machine. All right, because they are always accurate, or the information still needs to be all right. When you use Excel automatically calculates whatever it is you have inputted into cells. All right, so we have that on that. There's something called chart of accounts. Okay, chart of accounts. Accounts. Now, when we say chart of accounts, what are we about? Chart of account is a set of numbers and code that define each account head and also differentiates classes of accounts. All right, define each of account head. Are we together? And differentiate between differentiate, not shades, differentiate between of accounts. Of account. Okay. Now, there's something called statement of profits, all right, or loss. Statement of profit or loss. Okay. But just before we talk about statement of profit or loss, there are some certain terminology in this statement of profit or loss that we need to know. Okay. So, but before we talk about these terminologies, what does it mean by statement of profit or loss? Now, there's something called final accounts of the sole trader, which basically consists of the statement of profit or loss, all right, and statement of financial position. Now, when we say statement of financial position, statement of profit or loss, it's simply talking about an account, all right, that has listed on it, all right, the profits are or the losses an organization or a firm has incurred in a particular financial period. All right? In a particular financial period. Okay? And it is said that the final account of a sole trader basically consists you see this course, it's not because of it's difficult that a lot of people will fail it, all right, but a lot of people will fail it because small details like posting on the credit side what's supposed to be on the debit side, posting on the debit side what's supposed to be on the credit. That's why accounting is very difficult to small details that you will ordinarily not pay attention to that will make a lot of people fail. So please, whenever you are in the class, current class or retrospective classes, pay attention to details. Okay? Don't go and put what's supposed to be, all right, in this particular account and post another. You remember when we said error, overcasting, undercasting, complete omission, all right, complete omission, error of complement. Okay, all these errors, they are there. Please don't fall victim. So now we say final account of a sole trader basically consists of what we call okay, consists of statement of profit, statement of profit or loss. All right, statement of profit or loss, or statement, and I mean statement of financial position. Statement of financial position. All right. So in the final account of a sole trader, okay, you have things like statement of profit or loss and statement of financial position. So now, statement of profit or loss is then subdivided into two. All right, two sections. We have the gross profit or loss and the net profit or loss. All right, under this statement of profit or loss, we still have the gross profit or loss, or the net, about some technical terms. So permit me to raise the board so we can take some technical terms. Miss Blessing is not on the stream tonight. I think a few of the others are also not. Probably they are having issue with network. Maybe that's not work. Miss Ajuma as well. I've not seen Miss Ajuma. Miss Oluwaseyi, I've not seen her too. I think a few of them. Sales represent a third party. Total of all credit, all right, credit and cash transactions, all right, total of all credit and cash transactions made to a third party. Now, when you are recording sales, you don't include withdrawals, all right? All right, you don't include withdrawals for personal use by the owner, all right? You don't reduce, you don't, and also you don't include non-current assets, all right? Non-current assets are those assets that extends that their benefit extends more than a year, all right? Like we said, we have furniture, we have vehicles, all right? We have plants. Don't include them, okay? So you don't include withdrawals and non-current assets. Withdrawals and non-current assets. Now let's continue. Now there's something called return inwards. Return inwards. When we say return inwards, they are goods previously sold. These goods have been previously sold to customers, but were lately returned either in whole or parts, probably as a result of some reasons. All right, goods sold. Okay, goods sold to customers, previously sold to customers, but unfortunately were later returned. Okay, these goods were later returned, maybe based on wrong specification, the model, or the color, deficiencies. All right, the efficiencies, maybe along the way during the process of transporting it, something got bad. All right, all these things could lead to why goods like this are being returned. So now you need to remove, subtract the total amount of return inward from the sales. All right, from the sales value. don't forget that when you sell, you collect money. All right, and when they are returning the goods now, you might not give them money back. You might replace it with some other goods. So you need to deduct the value of the returned goods from the sales value. Okay, minus from the sales value. Okay, so we have what is called opening stock. Now, when we say opening stock, what are we talking about? These are the value of stock of goods. Value of stock of goods meant for sales that are available with the business at the beginning of the accounting period. All right? Opening stock is the what we call stock of goods. Stock of goods. Available. Stock of goods available for, okay, available for sales. Okay, stock of goods available for sales. At the beginning, all right, at the beginning of accounting year. At the beginning of accounting year. Okay, so we have purchases, but I'm not going to write that. Purchases represent total value, okay, total value of goods that are bought for cash and on credit for resale. All right, purchases are the total, all right, are the total value of goods bought whether with cash or on credit in order for the organization to resell. And it does not include the purchases of non-current assets. So we have carriage inward. When we say carriage inward, it represents the cost of transporting goods meant for resale. Meant for okay, now we have, okay, we have carriage inward. Now this is the cost of transporting goods meant for resale into the organization, meaning that the money spent by the organization to get goods, all right, goods that the organization needs to resell, all right, the cost of transporting to bring the goods into the organization is what is seen as carriage inward. And this carriage inward is categorized under purchase because the company is spending money to acquire further money. Are we together? So it's seen as expenditure as well. Seen as expenditure as well. Additional cost. It is seen as additional cost. Okay, so we also have what we call return outwards. Return outwards are goods previously bought for resale but later returned to the supplier due to one reason or the other. Just like we have carriage inward. Just like we have return inward. Alright, return outward is the opposite of return inward. Okay, and lastly, we have the closing stock. The closing stock represents the value of stock of goods that are meant for sales which a business has at the end. Alright, the value of stock. Let's take that down. Closing stock. Closing stocks. Okay, the value, all right, the value of stock of goods. Value of stock of goods. Okay, value of stock of goods available. All right, available. All right, or with the organization at the end of okay, the value of goods available, are we together? It is said to be the value of stock of goods that are meant for sales. Stock of goods meant for sales. Okay, which a business has at the end. All right, which a business has at the end of the accounting year. Okay, so we have that as that. So on this note, we'll call it a wrap for tonight, and I am certain, I think with maybe 1 or 2 classes we'll be done with the theoretical part of ACC203, and hopefully by next week we can take on GST courses. All right, thank you very much everyone. Please, let's do well to submit our updated notes. For those of us that are complaining I have not been doing assignment lately, don't worry, when we start calculation you will do assignments. All right, you will have enough assignments to do. All right, but this level we are getting advanced, so I'm taking out my time to ensure you understand the rudiments of these courses. Okay, please, let's do well to keep our notes up to date and submit them to the appropriate portals. And for those of us that might be having issues navigating the courses on the website, please do not hesitate to reach out to me so I can put you through properly. Do have a wonderful night rest and a wonderful weekend ahead. I look forward to seeing you all by next week Monday. Then our tutorials continues. Have a wonderful night rest. Bye bye.